Hello, and welcome to episode 5 of my podcast. I'm going to do something a little different this time. I'm going to show you some slides because in my previous 4 podcasts and in my podcast with Marty Bent, I realized that I was saying a lot of things that most crypto people don't understand because they're really not aware of the history of financialization and financial products. And this ETF is a financial product. And so I want to cover some ground as to previous financial products and where my role is and how I know about all this. I'm not just Googling this stuff. And so let me focus this time on this presentation. I think it's going to give you some new faith, I hope, at the end, that we are really entering into a completely new era in terms of this ETF. Okay, so with this in mind, now let's focus on this Bitcoin ETF and the financialization of crypto. So what do I mean by the financialization of crypto? Well, what I'm going to try to convince you of in this really short presentation is that there are really 3 takeaways here. First is that really all asset classes are getting financialized. So we've seen stocks with index funds, the Vanguard Index Fund, and so on. I won't cover those. That you understand. But I want to cover mortgage bonds. I want to cover real estate. I want to cover gold, and I'm going to talk in this and further about this upcoming Bitcoin ETF. So that's the first thing. This is an inevitable thing. This is the pattern of the last 50 years, this financialization of asset classes, and it's inevitable. This is the second takeaway, this is a huge value driver. This leads to a huge increase in adoption and in value. We've seen this every single time with this packaging and this financialization of assets. And in my view, in my estimation, this will fundamentally change Bitcoin to become a custodial product. So if you're thinking, hey, Fred, not your keys, not your Bitcoin, I got some news for you. You're completely wrong. That is going to be 180 degrees away from where this thing's going. It's actually going to, most people don't even care about their keys at all, or may not even understand what keys are, but they love their Bitcoin. So let's dive into my perspective. So who am I? Well, I think I'm sitting in a pretty unique spot in that I spent 6 years on the prop desk in Wall Street, trading at Salomon Brothers and Greenwich Capital Markets, trading north of $1 billion back in the early 90s. And, that would easily be $10-20 billion today in sort of equivalent sort of scope of asset size. So I really understand that world very well. I've structured assets. I worked on the capital markets desk at Salomon as well to bring new asset classes to life, new asset products to life. I also understand the technical side of cryptography and Bitcoin really well because I have a PhD in math from Stanford. And, I've actually gone through the probability theory of Satoshi and checked out all the numbers in the white paper. So, I really understand that part of it. And the third thing is I really understand Bitcoin and the crypto industry. And I know Bitcoiners hate the word crypto, but this is one ecosystem. There are wallet makers. I built a wallet that was pretty widely used on a blockchain called EOS at one point. I've bought Bitcoin, and I didn't get into Bitcoin like some people where they're like, I was in Bitcoin since 2014. No, I got into Bitcoin in 2019, and I paid serious money for my Bitcoin. So I have experience of holding Bitcoin, buying Bitcoin at all different kinds of prices. Most recently, I bought Bitcoin almost at the low here, at 16,000. I bought GBTC, and so I've quadrupled my money on my GBTC this year, just to give you an example. So I have a lot of experience trading Bitcoin. I totally understand the innards of Bitcoin, the innards of Lightning. I understand all that stuff. So, I'm in a fairly unique position. There are other people who have come from the Wall Street background. James Lavish is there. Foss is there. There's certain people out there who come from Wall Street, but not a lot of them really understand the technical side. And I'm not trying to brag or anything, but it's just I come from that background. So I have this unique perspective, and I think this is why I have this view, which is pretty non-conventional, but I think it's accurate. So let's talk about how I see this thing playing out and why I'm so convinced of this. Back in 1983, the financialization of mortgages really started, and it was really the product of two people, Larry Fink at First Boston and Lou Ranieri at Salomon Brothers, co-invented the CMO, or the collateralized mortgage obligation. Now, there were Freddie Mac, Ginnie Mae's, Fannie Mae's before, but the idea of packaging these mortgage securities into a bond with different tranches, so some pay out quickly, some pay out longer, there's a residual class. This was the brainchild of Larry Fink and Lou Ranieri. And that was 1983. And 3 years later, I joined Salomon Brothers, and I was on the arbitrage desk at Salomon Brothers. So I understand this stuff really, really well. Larry Fink created BlackRock, typo, in 1988. And another aside, he offered me a job there, and I accepted, and I joined for one day in 1988, back when BlackRock was a complete startup. And I should mention that BlackRock was started out of an investment from Blackstone. So the two, BlackRock and Blackstone, are related, and we'll see a little bit more of this in the future. So in 1997, we saw another amazing financialization, which is the financialization of real estate. So, this is we're now talking almost 2000s, and Sam Zell is really responsible for creating this product. So Sam was a real estate investor out of Chicago, and he bought up a number of office buildings all over the country, but in LA and Chicago and New York, and he created a product that made these office buildings really palatable to mainstream investors. And this product was EOP. And this was really the largest and most significant REIT. There was other REITs around, but this was the brainchild of Sam Zell. And he sold it to Blackstone in 2007, right, for, I believe, $20 billion. Anyways, he's got a great book out. If you kind of Google Sam Zell's books, it's amazing. He died recently, but brilliant man. So he saw how financialization of real estate could work. And obviously, this totally changed the real estate landscape. Now, most office buildings are owned by REITs. They're not owned by individual people. Donald Trump still owns a few of them, but most of them are owned by REITs and that are packaged and sold as public stocks. 1998, a year later, Jim Rogers, also an author of a great book called Investment Biker, launched the Rogers Total Return ETF. So he saw that there was all these people were underinvested in things like sugar and wheat and pork bellies and all these things that you see in trading places. They weren't owned by people, and so he created an index and an ETF that tracked those. And so, this is less important than the mortgage market, and it was certainly less important than the REIT market that Sam Zell built. But it was a significant, also just shows that you have an asset class, it gets financialized. Next one was the financialization of gold, right? So, people have owned gold for a long time, and I've owned it from before this ETF. I've owned it from 2002, and bars of gold, physical bars, and I still own them. And it was difficult to buy gold before 2004. You had to go get it in bars. You selling it is difficult. You can sell it, but you have to get it tested and you have to store it safely, et cetera. So in 2004, this was changed, and it was introduced. There was actually a REIT before it in Australia, but nobody cared. And in 2004, the GLD Spider Trust launched. And if you look at this chart, you will see that the gold price quadrupled between 2004 and 2011, primarily due to this ETF, right? So if you think about it, was there a lot of inflation in 2004? Absolutely not, right? So in 2004, we were coming down off of the dot-com collapse. The market there was no inflation. Real estate was starting to heat up, but there wasn't inflation. There was asset inflation. And so you would think, why would gold take off like it did? And you can see it just completely took off. And the reason is because finally there was a vehicle that made gold palatable as an investment for mainstream investors. So people could say, I'm going to put a little bit of my money into gold. So we had this huge, ramp, this 4x ramp from 2004 to 2011, 2012, and then it crashed. And actually, one of the reasons why gold went down in 2012 was that was really when the FANG tech stocks really took off, right? So now we had, really easy money after that, and people sort of said, well, maybe we've been a little bit too defensive by putting all our money in this GLD. Let's let's devalue that a little bit, and let's put money into Amazon, Apple, Google, Facebook. So that's what happened in the sort of 2010 to 2020 era, and actually those stocks really outperformed. So one of the things we're seeing with this is that these assets get securitized, they get financialized, they get packaged, and then they start trading as bulk assets. So the way that the asset managers think is, what asset class do I want to be in, and where do I want to park their money? So really, we see that financialization is the door to big money. Big money, in the case of Bitcoin, absolutely does not want to hold its own keys. Now, Michael Saylor studied this intently for MicroStrategies and eventually went with Coinbase custody. But you're not, if you're running a lot of money for somebody else or for an organization, you really don't want to just hold your own keys. That's just not possible. Now, big money is also weary of crypto custodians. Now, at this point, Coinbase, it's a public company now. They're crypto custodians for other people, so people sort of trust them. They trust people like Gemini less. Sam Bankman-Fried recently blew up. He wasn't a custodian of anybody, but he was sort of representing to himself as he was the safe money. So at this point, I would say big money is very, very leery of the idea that is being presented by hardcore Bitcoiners. Big money wants standardization. It wants auditability. It wants transparency. It wants an annual report at the end of the year. It wants a board of governors, a board of directors. So, it wants somebody like Larry Fink, who now is doing the Bitcoin ETF, who previously did the collateralized mortgage obligation. So, this 40-year track record that BlackRock has in financialization counts for a lot. So how big is this market, this ETF market? Well, I think the number I would like to throw out there right now is 10 trillion, right? Because the total global market for ETFs is 10 trillion right now. Now it's spread out over hundreds of ETFs. There's not one winner take all. There's going to be 13 applicants for this Bitcoin ETF, so it's going to be a mix. You know, the Fidelity ETF is going to get some takers. The BlackRock ETF is going to get some takers. The BlackRock ETF is likely to be by far the biggest, and it's not static at all. So, you know, we've seen this market go up 10x from 2003. This was a tiny market 2 decades ago. It has doubled in the last 10 years, and if I had to guess, I would guess it's probably going to double again in the next 10 years, or quintuple again, sorry, in the next 10 years. So I think, you know, this 10 trillion number that's being allocated to these kind of ETFs and packaged products, likely to go to 50 trillion in the next 10 years. So, you know, we're talking about a very, very big pond in which to fish. You know, this is not like there's a small number of VCs investing in crypto projects. Now, this is huge, huge dollars that are coming into this market. So, how much is likely to go into Bitcoin ETFs into the next cycle? By the way, you know, for those not familiar, there's a halvening cycle that's built into the Bitcoin blockchain, and that's a 4-year cycle. So we tend to think in terms of 4-year cycles. Now, whether this cyclicality will continue to happen in prices, I don't know. I'm not actually sure beyond the next couple cycles whether it's even going to matter. But let's just focus on the next 4 years for now. And I would say there's $100 billion plus is likely to go into ETFs over the next cycle. You know, just other people who I look up to and admire, Mark Yusko, for example, estimates there will be $3 billion coming in on day one. You know, which is kind of, you know, on par with kind of the amount of money Michael Saylor has, MicroStrategy in terms of Bitcoin. You know, by the end of the year, $30 to $40 billion is very likely to be coming into Bitcoin. And within 4 years, I would say 100 billion is on the low end, and it might be as high as 300 billion. But with the 100 billion number, just kind of as the ballpark number, we have to ask, how does $100 billion come into, how does it change the price of an asset with fixed supply? Now, you know, when the GLD ETF came out, gold production increased. You know, it didn't increase 10x or it didn't increase much, but it did increase. The supply of Bitcoin is absolutely fixed, and the amount of Bitcoin that's trading on exchanges is completely fixed. So it really does look like 100 billion coming in increases the price by, it'll increase the price from 1 trillion to 10 trillion. So it'll have a 10x increase in price, bringing the total market cap per coin to around 500,000. Now, could it be 200,000? Could it be 1 million? You know, it's and everything's entirely possible. So, but that's the multiplier number. And I'd also like to single out a little shout out to British Hodl. You can Google him. His Twitter account is excellent for going through some of this multiplier analysis. Now, 500,000 Bitcoin, you know, again, if there's 2 million Bitcoin on exchanges, which is currently where it is, you know, $100 billion coming in will buy all the money on all the exchanges. That's not happening. So, you know, the 100 times multiplier, the 10x increase in Bitcoin price is very kind of likely in that scenario. So that's the game plan. Now, what does this mean for? I know that a lot of Bitcoiners are not going to like it. I've known that in some of the posts are like, "Who's this finance guy trying to tell us that Bitcoin's not going to change the world. Well, it's going to make some people very rich, but I'm not 100% sure it's going to, quote unquote, change the world. And the reason I say that is these Bitcoiners today are basically telling people that there's going to be this parallel financial system that you have to sleep on a mattress, save all your money, and hold all your own keys, run your own node, and that we are headed to hyper-Bitcoinization where fiat money will have no value, and you should all move to El Salvador. Now, I've been to El Salvador a couple times because I'm very interested in how this adoption could happen in the developing world. But I am not a believer that hyper-Bitcoinization is going to happen in the next, decade or so. I believe that we are going to that Bitcoin is going to be a great financial asset to own. But I believe that the profile of the Bitcoiner is going to be the average American, pretty much, which is going to be great because the average American, after, there'll be a lot of Americans who have a significant amount of money in the Bitcoin ETF in the next year or so. And these people will really not care or know anything about keys or nodes or Lightning or anything else. So just own Bitcoin. If they want to sell Bitcoin and buy something else like the newest AI stock, they can do that. So that's kind of my take on this this Bitcoin ETF. It's coming now within 30 days. So I think in 4 weeks from today, we should have the approval for the Bitcoin ETF. This is not 100% certain, but it's really, if I had to put a number on it, I would say 95%. It really does feel like we're 95% going to get an ETF. And I just think it is the most important thing that has happened since I ever heard of Bitcoin, really. I mean, it is the most important thing. Don't worry about the halvings. Don't worry about, the economic macro theory. Don't worry about anything. The only thing that matters is financialization of this asset and opening this thing up so it becomes a mainstream financial asset. I'm signing off and wishing you well and hoping that you get in on this Bitcoin ETF when it comes out. Thanks.